Hello and welcome to this session on maintaining liquidity and meaningful cash forecasting in uncertain times. We've got a great panel of experts here for you to hear to get their insights as real world treasurers, and we'll move on to introductions in just a moment. First of all, some brief housekeeping notes. You'll see to the right, I believe, of your screen panel, and there you can find Q&A. So do put questions in through the session, which we will try to cover off during the panel discussion or at the end. We are going to be recording the session, so you'll be able to come back to it at another point. And don't forget to use social media using the hashtag ACT Middle East, and our Twitter handle is at ACT Update. But without further ado, I'd like to introduce our panel. They're going to introduce themselves and just a little bit of context around themselves. So if I could invite Bruno, first of all, to say hello to everyone.
Sure. Good morning, everyone. So my name is Bruno. I work for BRF since 2009. I worked 5 years in the headquarters in Brazil with risk management, treasury, and corporate finance. Then in 2015, I was invited to join a global business development team working projects in Singapore, Turkey, and Egypt. And since 2017, I have been leading the GCC Treasury. And since last year, now, the International Treasury for BRF as well, with 3 treasury centers, one here in Dubai, another one in Turkey, and the third one in Europe, in Austria, right? Just to give a little bit context to who we are. So pretty much we work on the food industry in GCC alone, mainly on the poultry, the chicken, and processed food products. So it's about $1 billion revenue in the region, and we are serving more than 18,000 customers. This will be important when we discuss about the topic today.
Indeed. Thanks very much, Bruno. Over to Rahil, please.
Yeah, hi everybody. Great to be on this webinar. My name is Rahil Daswani. I run the structured finance desk for Microsoft in Customized Solutions International, as we call it, which are the markets covered under Central Eastern Europe, Middle East Africa, India, and APAC. Customized solutions for us is our approach to providing our customers non-recourse financing solutions so that they can buy more from Microsoft. Gosh, I've been in this kind of finance and treasury role for now 20 years. I'm originally started my career in India when I became a chartered accountant, worked in G Capital, Citibank, Nokia, and now Microsoft. I have, by the way, also qualified the AMCD course from ACT. So, very much support the professional executive education that some of us are pursuing. Really look forward to this seminar.
Thanks, Rahil, and thanks for the plug for our qualifications. That's very kind of you, but it obviously has held you in great stead in your fantastic career so far. Moving then on to Gianluca.
Hello, everybody. Good morning, first of all. Nice being here. I'm Gianluca Ilmosi. I'm the Group Treasurer for Aldara Group. Just to give you a little bit of context, Aldara is working in the food security. Is mainly for UAE and also doing food security in certain type of commodities around the world. We do have 25 plus countries in which we operate directly, and therefore we are going to have some fun in today's discussion, I can tell you. I have a clear passion for treasury, and I spent my last 22 years in treasury in big organization across GCC, but also in US and other parts of the world like Rahil. I've been working in G Energy.
Well, thank you, Gianluca. And I was just doing a quick calculation, know what we finance people are like, and we must have about a century of experience in treasury and finance between us. So you can see the grey hairs, of course. We all know how important cash flow forecasting is. It's always been, but of course it's rised up a huge, well, not even a notch. It's risen hugely in importance recently, and for obvious reasons. And we have had some, we know best practices that we've had before. I'd just like to talk to you a little bit about what are the best practices that you've known before, but what has been kind of accelerated, what developments have come up through the uncertainty of the pandemic, and what's working well for you. And I'll stick with you, Gianluca, to start the ball rolling.
Thank you for the question. Well, first of all, we all know how much is important the cash and the cash flow forecast process for all of us and all our companies. Pre-crisis, I would say that we were trying to be a little bit proactive by looking at our business because of so many presence in different geographies. So we try to look and move the existing cash flow forecast process from the indirect method to the direct one. And this became more and more the rationale to follow on daily basis. What do I mean? I mean that immediately after discovering the issue on COVID and the difficulties in cash that all the companies nowadays are having, we decided to look on a monthly cash flow forecasting, a direct method, by staying much more close to the business. This was initially supposed to be done on a monthly basis, but with a regular review with all of them. And when you do that, you try to understand or anticipate or better understand the business that is happening in each country. So you stay more close to the people that are running the show. This is something that we keep going and is giving to us a lot of satisfaction, because we do have different, not only geographies, but different type of industries and different state of the industry that we have in the geographies per se. Another item that for sure I've seen that is working pretty well is in relation to the buffer that each organization pre-crisis was keeping. We all know that in the past we were trying not to leave cash on the plate, but nowadays instead the approach is completely different. We would need to leave much more balance or much more buffer in these countries for operation to be sure that if there is any complication, this additional buffer will be there and available. There are of course some instruments that are available in the banking industry that may help the organization in creating this buffer or adding a little bit extra in case of needs. And I'm referring of course to the working capital facility that are specifically becoming also more and more available in the UAE or in the GCC. So I'm referring to reverse factoring activity, inventory financing, or discounting without recourse. So these are also items that could be interesting to look at.
Absolutely. Thanks very much, Gianluca. And we'll move over to Bruno and see what's been happening in your industry.
Yeah, I think here Gianluca mentioned very well a few important topics that we have been seeing during the crisis, right? So in our case here, since we work with food, we need to guarantee that the retailers, that our customers, they will have enough inventories available to sell for the people, right? And food security, as he mentioned as well, is very important. So here for us, it was what? As head of finance for the region, I already have been very close to the business in our weekly meetings, right? But then we need to get even closer to the supply team. We need to bring more stocks to the region, right? And also we need to get closer to the commercial team. So we set up accounts receivable and credit and collection committee where we meet 3 times per week, 2 times only finance, 1 time with the commercial team, because the commercial team, they understand that a sales is only completed after we collect the cash, right? So, and this has been helping us a lot during the crisis. And finally, we have the procurement side team that we need to get very close. During the crisis, we set up also a weekly meeting with the guys to see what are the initiatives that we could have in order to extend our payment term, whatever is possible, but also how we are gonna support the smaller suppliers, right? And I think here, what have been seen in the region, exactly what Gianluca said. Supply chain finance has been growing a lot. We have been seeing the local banks as well now speeding up this agenda. I'm very here in the UAE and Saudi Arabia, especially that. Also have been seeing now the banks more proactive, offering the receivable discounting programs, right? So I think a few things have been speeded up from the bank side here that help us to manage the liquidity in the region as well.
Thanks very much, Bruno. Rahul, your thoughts?
Yeah, so I think, our approach has been that cash flow forecasting has always been, very important subject for the company. So it has been looked at closely. However, I would say that it has not been looked at as closely as we started looking at in the last 6 months, where, senior leadership who in the past would have said, okay, it's a forecast and it comes every month, suddenly, started to say, okay, let's take a look at it and what's going on. And partly this happened because the volatility that we saw in the first few weeks or the first month, of the pandemic, and also because the pandemic was such a global event, not a event in one part of the line of business or one country. So it was at the top of mind for all senior leadership. So everybody wanted to know what's happening on the cash flow forecast. Of course, that became a little bit challenging for the business teams because, as you know, forecast is not just for next few weeks. It's actually a forecast we do going forward. Even a couple of months because we have account receivables and accounts payable. And then you have customers and suppliers wanting to change payment terms, and as Bruno was saying, asking for deferrals, or as Gianluca was saying, putting in place some supply chain financing solutions. So I think this volatility was very high, causing a lot of attention. What we did as a best practice was we started a separate tracker for what are COVID-related issues. So, the company therefore was able to kind of separate out COVID issues versus, regular business issues, because otherwise it became very hard to apply a solution to what was a requirement on a deal-to-deal basis of a customer, and we tried to separate them out. So we built a Power BI tracker, which was taking data from across the world and separating it into COVID and non-COVID issues, so that the management could make a decision that for COVID issues, we would run exceptional programs, something like Bruno talked about, trying to give maybe some deferral programs, while for non-COVID issues, manage it, as business as usual. Those are some things I could comment.
That's really interesting, and of course it is a challenge trying to understand what is actually COVID related and what's not, and a very important aspect. So thanks for sharing that, Rahil. I'm going to stay with you for a moment or two and just ask you a little bit further about some of the, how you've been working with the business, and what are some of the pitfalls you've seen in terms of systems and behaviours that you've come across during these times.
Yes, so I would comment that the one kind of learning which came to us in the last 6 months was that we have built a system and process which allows us to function remotely, and this was done way in advance because we've been using technology a lot, partly because we use our own technology, so we have a certain degree of advantage on that. So we were kind of built around that. But even when we use kind of other companies' tools like SAP or other ERP systems, or let's say security authentication tokens. So we had built system and capabilities where we as a group could function remotely from work. We could function with tools without paper, and a digital way of authenticating transactions. So I think we were fully set up, and that was very helpful. But we suddenly came to realize that our banking partners were not set up like that, with all the, bravado, they talk about, and, all the communications we receive from them, about digital setup. When we actually started leveraging that, we suddenly recognized that the banks were still fairly antiquated, where even saw something like a, signature, they were not ready for a digital signature. And I think, the banks are fairly dependent on a lot of operation folks to process transactions who were just not set up to work from home. So I think we had quite a lot of challenging periods initially where, we suddenly recognized while internally we were set up, but I think our external banking partners were neither set up to work from home, neither set up to work in an interconnected fashion. I think there is a lot of investment in technology that the banks really need to consider.
Absolutely. And just on the point of Microsoft, I should just say that the ACT ourselves thanks. We've been immensely grateful to Microsoft and our IT gentleman who supports us, because we had teams in place and so on before the lockdown here in the UK. We had a really smooth transition. So, as I say, we're very grateful to you. But on to Gianluca, I think you may have some things to add about some of your frustrations in this area.
Yeah, well, let me add something on top of what Rahul clearly specified. On top of it, I would say that when you have large scale of operation, of course, and you have a setup in which the cash flow forecasting is really working well for a certain period of time, COVID-19, of course, is the game changer. So over there, you have a monthly review with all your colleagues that are in various jurisdictions one more time, and you move from an indirect method to a direct method with maybe a weekly or every 15 days review. And this is becoming a little bit more challenging from system perspective, of course, because you run it on a monthly basis and then you become bi-weekly or weekly in case of certain countries. And this is coming also from a different behavior, because the teams that before, for a certain period of time, have been used to follow certain processes, now they are under much more stress and push, centrally driven by corporate treasury or the treasury department that is simply trying to help them in a situation that is unusual, I would say, or exceptional. We have been living the last year saying that this is an exceptional situation, and we have been listening to the worldwide organization in terms of healthcare and so on. They have been saying that most likely by Christmas there should be a vaccine, or early next year. The problem is that we need to cope with that. We have changed the way how we are working. Smart working is one of the solution, of course. But the behavior are also completely different nowadays. So the Department of Corporate Treasury nowadays is becoming more and more relevant. It was already like that in the recent years due to certain reasons. But now is a sort of message, help me to help you out. So we need to have more visibility, granular visibility, in order to create the necessary cash buffer that is a must for many operations. So this is not only in the food industry, and of course this is applicable also for Bruno, but I would say all over the places. Also the business model is completely different. Many years ago there were very low level of inventory, if you look, because this was costing money to the organization. And nowadays instead it's completely the opposite, because you need to have the product on the ground, because we may have problem in the logistic and in other operations. This is coming, of course, very, very important when it comes to food security, but is applicable to other type of sectors. So we do have this change that we are driving, of course, and helping our colleagues in understanding that we are there to support them on a daily basis. This is the game changer that I've seen in the last year.
Yeah, no, absolutely. So, well, let's go over to Bruno's industry then, and get your comments, Bruno.
Yes, I think here from our side, coming back to Raul's point, right? So I think definitely the banks, most of them, they were not ready for that, right? So, and I think here I have a story, for example, to illustrate what happened, right? So we were trying to withdraw some money in Turkey, but one of the signatures, it was here in Dubai, right? The driver needed to go to the signature, collect the signature, but not only that, record while he was signing the documents, you know? Imagine. So the situation, the driver was recording while someone was signing because the bank wants to make sure that the person was the person, you know? So I think here I see as an opportunity, and this is how I see a few banks already working on that, to fully go paperless, right? So internally here, before the pandemic, we already had the vision of go cashless, and I think this is something that we have been seeing speeding up as well, but also we need to go paperless, especially in this region where we know that people like the paper, right? I think this is from one point here. And the second point internally, I think, is we as treasurers working truly as business partner, right? So if you're able to build relationships before the crisis, I think during the crisis was much easier and the relationships got much stronger, right? If you try to build the relationships during the crisis, you can do that, but it's much harder. That's why it's very important that for us as treasuries to get closer as much as we can to the business in order to support them. Because in the end, we are here to support the business.
Yeah,
If I can jump in, Carol, in just a second, Bruno, thank you, because this is a very good comment. I would like to add that COVID-19 for us as a treasurers, I guess it's also a big push, positive push, because there are a lot of opportunities to become much more paperless. The bank industry, we all know that is really not aligned worldwide. We have seen situations that is keep going, like in US, where we have checks all over the places. In a country like US that is pushing significantly for technology, and it shouldn't be like that. While instead in UAE or in Middle East, we have seen the reverse factoring or other working capital or supply chain financing that are becoming more relevant. So there is a very big positive push that is coming as a great opportunity for all of us and for our organization, because the instruments that are available maybe in certain regions now will become also available in this part of the world. So I see also the beauty out of the COVID-19. We need to be positive in a way.
Absolutely. I think the things have been accelerated hugely, as you say, things that people said, oh, we can't do. We've proven that we can do. The impossible is possible. Also, I think, Bruno, just reflecting on your points and the importance of relationships. It's very interesting, because looking around the globe, talking to treasurers, we see that in these circumstances, they are finding it's difficult. If you haven't got a good relationship with your bank, then it's even more difficult. So I think it works both ways, doesn't it? You know, the treasurer's responsibility is to make sure you've got a really good relationship, whatever industry you're in, and some are more favoured by banks than others, of course. But you know, really ensuring that happens. Also, that the banks are really working closely with their treasurers, because after, you know, when we get to the next normal, whatever that is, the treasurers will remember which banks supported them and which ones didn't. So, Bruno, though, just continuing with another few thoughts. What to you are the essential elements to ensure liquidity through a crisis, and how does risk appetite come into this?
Yeah, I think that's a very important question, right? I think what we learned during the crisis, not only this crisis, but the prior crisis as well, is the importance for global organizations have a balance between the global banks and the regional and local banks, right? Because when liquidity comes to squeeze it, let's say this way, right? So the global banks, the USD dollar market went crazy. When we saw this in March and April as well, right? That's why it's very important for you to have access to different currencies in different geographies with different banks, right? So we, for example, in Brazil, having access to the Brazilian banks. We here in the region having access to the local banks in SAR, in dirhams, in other currencies. In Turkey, very strong, because we rely only on the Turkish bank or the global or the local banks in Turkey to access funding. This is critical for you to have these relationships before the crisis, because during the crisis, no one will give you money, right? So if you ask someone money and you are new, no one will give you. But if they know your story, they trust in you, they understand your business, it will be very easy to convince them that you need their support at that moment, right? I think Gianluca was saying here about efficiency, right? During a crisis, there are no efficiency. You get as much cash as you can in order to navigate the storm, right? And this is what we did as well in a few countries, especially in Turkey, where to guarantee, not for us, guarantee liquidity for our suppliers and for our customers as well, we were sitting in much more cash than we usually what we have in terms of operational minimum cash. But I think this has been very successful for us in order to sleep well and to make sure that the supply chain is resilient, right? And on top of that as well, not only on the borrowing side, but on the trade finance side that I know that Rahil likes a lot. So it's very critical, right? Having programs like receivables discounting locally in the region, here in Turkey, having supply chain finance programs, not only with the global banks, but also with the regional and local banks, they are key for you to navigate and have liquidity. And why? Because the regional and local banks, they have mandates from the government, or they want to support the local economy. They will be much more willing to take risks during the crisis, you know. These are a few topics or a few thoughts for us to discuss now.
Absolutely, Bruno. It's really important that local point that you brought up, local and regional banks being really, really important in your strategy. Moving over to Rahul next to reflect again on what do you think is important to liquidity and risk appetite.
Yeah, thank you, Caroline, for the question. So, receivable financing, and especially non-recourse receivable financing or working capital management tools, are very critical elements of liquidity for an organization. Having said that, I think what happens is these tools are potentially not leveraged enough, except when a crisis comes like this, and then everybody wants to have these tools, and somehow this has been a trend which we have seen crisis after crisis, because to set up a receivable financing program or manage working capital is not essentially the most easiest thing to do, because it does require a significant amount of workload, and we can always discuss why it's not digital. That's a separate subject. But from our perspective in Microsoft, we had been supporting these solutions from a sales finance perspective for quite some years now, where we were using these to go to customers to say, okay, if you want to put in a new deal, here is some extended payment terms which you can organize, going up to 1 year, 3 years, installment solutions, etc. So that had been kind of our capability which we had built. And then when this COVID crisis came in, these solutions became very useful even for existing deals. So that's what we saw right up front, that customers who had existing deals came to us saying, hey, you know what, we need to have some solutions around this, because we are doing our own planning on how we need to manage. Retail came to us saying stores are closed, the hospitality industry was hurt a lot, manufacturing industry was feeling the pain. So I think we immediately saw a lot of utilization on these programs right up front. And because we were set up to, kind of manage them, we were able to work that through. I would even say that, solutions like pure trade finance instruments, which in our business, which is software business, has traditionally not been popular, has been something that customers were even willing to consider. So I really think that, this crisis, like everybody says, never let a good crisis go waste for the opportunity it poses. So I do think that it is definitely a good opportunity to kind of bring this up with customers who are now open to having a discussion on this subject. We are actually also considering how we should be careful on these tools, because in the end we are also considerate our banking partners, because while we obviously find a benefit, we also want to run a healthy solution for our banking provider. So we are quite careful of the risk that's in the environment and making sure our banking partners also have a healthy portfolio mix. That's something we are focusing on right now.
Yeah, Rahul, I fully agree with you one more time. If I can jump in, and sorry to interrupt, because to me it's clearly that it's all about working capital. I mean, when you do the direct method, you need to spend a lot of time into it, really understanding in full which are the positions that you have in your balance sheet. And then you may, depending on the sector, activate one of the instruments that are available in the market from the bank industry. And I'm referring to payable, receivable, or inventory, of course. But another area that for sure is becoming interesting nowadays is the connection that we have with our procurement and sales department. Because over there, depending which is the strategy of the company in which you operate, it may be possible that you have some work to be done also there. So this is an area that we usually underestimate. We should be all, and we would like to be in pole position with the instruments that the bank may offer to us, and then activate in case of needs. So this is the one of the solutions that would address the liquidity issue, and also any unprecedented event that may happen in your cash flow forecast, even though you may do the direct method, if you like. So I would concentrate much more in the working capital review in full details for all our organizations. This is really crucial, I would say.
Absolutely. And we have a question from our one of our audience members, which I'd like to pose, see if one of my panelists has an answer for. And they're saying, can you please give an example of a structured trade solution that you have recently undertaken that was a win-win for all parties involved? And what kind of support would you like to see from banks in the region? Does anyone have an example?
Please, I could take an attempt at that. So some of the solutions, which we have implemented, are solutions where we've started to look at the supply chain and try to think about who is the final beneficiary in the supply chain. That actually is where the financing should be directed to. So this is traditionally been very different than how supply chain works, because quite often manufacturers or suppliers look at to whom they're selling to, and then the thinking is, okay, can we provide financing to our obligor? But quite often we forget that the entity to whom we sell to is actually a wholesaler or a distributor. He is not actually the consumer of those products. The consumer of the products may be one level or two levels beyond our chain to whom we sell to. So I think we have now fundamentally changed our perspective to think about financing to the end customer of the product, who really would actually need that financing solution to match the cash flow they have in mind. So it's not really blocking the system of the inventory in the distribution chain, but really targeted at the user of the product. So I think we have implemented some solutions around that, which we feel quite confident about.
I can give another example, if you like, that is in the other side. So on the payable part, in terms of reverse factoring, in one part of the world, we have implemented the pre-COVID-19, and we did it simply because I want to share this, because last year we have seen altogether the implementation of the IFRS 16, and there are some companies that have been penalized, of course, in the net financial position, and therefore the working capital solution that we just mentioned, at least the one that are off balance sheet, may come into the picture and now are becoming more relevant also for COVID-19. So at that time we started looking into reverse factoring as a solution of balance sheet, and it was a win-win strategy by the three parties, and I'm referring to the bank, Aldara, and the suppliers, because it was giving access to credit, cheaper credit to the suppliers, easy cash and fast. And from our end, instead, that was not on our shoulders, and the bank, of course, onboarded much more customers, if you like. So this was a clearly win-win strategy for the business.
Well, thank you. Thanks both to you, Gianluca and Rahul, for that. The next thing I'd like to explore is really whether organizations have become more or less agile during the last 9 months in respect of cash management, and what's been the influence of the board for good or bad. So Gianluca, why don't we stay with you, and do you have anything to comment on there?
Well, of course, it's all about flexibility. This is what we're talking about. You need to be fast and act immediately, and sometimes proactively, as much as you can. So flexibility comes with the difficulties. Difficulties also in system and the processes that are manually driven a few times. And this is because the flexibility is becoming with a different timing. So in this case, I've seen that there are some complications. There are some regulatory bodies that are within our organization, of course, that they provide a clear mandate, what is supposed to be done. As we say today, there is the liquidity issue that has to be fully addressed. And therefore, in our main goal, there is clearly this change in mindset that has to be adopted by all of us in being much more fast. So we need, all in all, push for technology, push for solution from third parties, looking at, again, our working capital more in details to try to unlock something that is there.
Yeah, I think here, Caroline, I truly believe that the companies, they are becoming more agile, right? So at least for us here, we have been seeing internally the risk appetite coming from the board. It's higher because everyone understands that is during the crisis, consumer behavior is changing, client behavior is changing, suppliers' behavior is changing, everyone behaviors is changing, right? And it's a good time to try and test, fail, and do it again, right? So the companies also realized during the crisis, the command and control centralized structure doesn't work, right? So, okay, you have a global committee that is managing the crisis, but in the end, you need to have some kind of decentralization because the guys in Asia, they are seeing things much before than the headquarters is seeing. Here in Middle East, we are seeing things that the headquarters in Europe, in America, they are not seeing yet, right? So this kind of decentralization is very important, and that's why it's very important to have a very strong team as well, right? So I think for us here in the crisis, we have been seeing the customer behavior changing, right? Our clients, they are changing, and we are trying new things. We just launched in October a new channel for payment that is the invoicing, right? Now our mom and pop shops, the grocery stores, they can pay online, right? We send a link to them and they pay using credit card. That before was very hard to convince them to use, but now they are using. So I truly believe now that the companies, they are becoming more agile, and I think we, as finance, as treasury, we need to drive this agenda.
Again, it's this acceleration, this opportunity that has come over the past months, isn't it? Which is amazing. Rahul, your comments on agility.
Yes, I think agility. I agree with both Gianluca's and Bruno's comment that I think companies are becoming more agile. I think what's driving the agility is the fact that the centralized approach is not necessarily very agile in a pandemic set of an environment. So I mean, simple example is there are certain fees where we have not prioritized trying to build in kind of solutions capabilities, primarily because those are exceptionally difficult markets from a regulatory framework, from our kind of central way of doing things, as all corporates will recognize. But I think what's happening is the field teams in those markets are responding far quicker now, and then they're pushing us to say, okay, don't use your central approach because the pandemic requires a different solution, and I think at this point we are ourselves therefore forced to recognize that. So I would take it on ourselves also that our own rigidity has been challenged in a pandemic situation, and I'm very happy to see that all of us are also changing our mindset, because let's face it, all human beings have a little bit of a fixed and a little bit of a growth mindset both. So I think agility is definitely coming forward from companies. I would unfortunately say that this is not something which I see our kind of banking partners demonstrate, and not that I want to pick on them, but I think I think the banks are really challenged with this work from home environment, or this fear of this credit crisis. Every day there is an article in Bloomberg which talks about upcoming losses, and so the credit engine of the banks are just not ready to kind of undertake new opportunities. So I do hope that the banks also start to share this agility with us. That would be my hope.
Thanks, Rahul. I've got a question just come in, so I'm going to take it as the last one before you each give a little roundup, because we're coming into our last few minutes here. I think we've got 4 minutes left. So this question is, how do you deal with collections from group companies where it is difficult to enforce the payment terms? Not respecting the ICO payment term creates problem in managing cash flow at individual entity level, where one entity is forecasting to receive the payment while other is not planning to make the payment. Anyone a quick response on that one, how you would deal with that?
Well, I can judge a little bit this one. Of course, it's something that may change in this period of time due to the liquidity issue, if you have. But I would say that if you have a pretty strong and decent policy and procedure that regulates the payment terms between parties, whatever you forecast should be also forecasted by the counterpart in terms of cash in and cash out. If for any reason this is not happening, then both parties will have to adapt and change the forecast. So there are some magic rules to follow, and the instrument that we mentioned today that are in relation to how to unlock the cash that is sitting in the working capital could be also combined by ad hoc overdraft facility in certain jurisdiction if you need. That could be an extra buffer that you may use in case of needs. But this is one of the last resort, I would say.
Well, thanks very much for taking that one, Gianluca. Just as we wrap up, I'd like to ask each of the panelists in turn what would be the thing that the message they'd like to give to the audience today, and what they think the audience should be taking on as any suggested actions or things to be aware of. And maybe I could start with you, Bruno.
Sure. So yeah, I think here two final comments or messages, right? I think the first one gets closer to the business, right? So and truly have a business partner mindset here, because this helps not only during the crisis but any time to build a relationship with the business, right? And the second one, during the crisis or after the crisis, hopefully very soon. So the consumer or the people behavior is changing. It's a good opportunity to try and test new things. And we, as Treasury, we truly need to drive this agenda of innovation.
Absolutely. Thank you. Gianluca.
Well, to add what Bruno said, of course, I would say do it more in details. If you reinvent the wheel, you know how it works. So therefore, you may look into this for the working capital.
Thank you. Rahil?
Yeah, I would say that, this is actually a great opportunity. I think anybody who looks at this crisis and says is actually a difficult time, for sure it is, but every difficult time provides an incredible opportunity. And I think this is an incredible opportunity to both get upfront on technology and also on this, kind of growth mindset to try and do new things. And I really hope, that all of us aim that.
Thank you very much, Rahul. Thank you to all my panelists today. It's been great having you with me here. I think your insights have been absolutely fabulous and really great for people to hear from, actual experience. So thank you once again. If we could give you some applause, we would, but let's take it as a virtual applause is going on right at this moment. Just some brief words then to our audience in terms of the housekeeping again. Do please complete the survey, which is near the Q&A button, I believe, right next to it. It's really helpful for us and for our panelists to get feedback so we know how to improve for next time. Do continue the discussion though. You can go into the discussion forum, you can chat directly with people, and I know some of our panelists will be moving into the discussion forum to have a little chat there now or later today, so do connect with them there. You can watch this session on demand again to pick up some of those points, should you so wish. And remember, it's available, everything on the platform is available for the next 30 days for you. Do get involved in social media with our Twitter handle at ACT Update or the hashtag ACT Middle East. Pay a visit to the exhibition hall. I know our sponsors would very much appreciate that. Without them, we wouldn't be able to hold this conference. And do join us for the next session, which is looking at expediting the Treasury of the future, along with a whole range of other live sessions today and the whole pre-recorded section, plus the Middle East Awards this afternoon at 16:40. So without saying anything further, I'd just like to wish you a wonderful day. Thank my sponsors, thank my panelists once more, and see you again soon in cyberspace.
Thank you very much.
Thank you.